Do you still think that Bitcoin is a good inflation hedge, or?
I think that what we are learning, like Bitcoin served as a fantastic debasement hedge. And I think over time, like my views have evolved on this. And I think the market is just getting smarter as we get more data, which I think is a healthy thing. Inflation hedge assets are actually a very interesting thing. Inflation hedge assets move before the inflation comes, right? So like one of the things that people forget is like, if I think inflation is coming, I do not wait for the inflation to get here and then move my assets. I move them in anticipation. So this is why in Q3 and Q4 of 2020, you saw Paul Tudor Jones, Stanley Druckenmiller, like all these like Wall Street legends talking about, we think inflation is going to be high. We're going to go and we're going to put our assets in inflation hedges. Paul Tudor Jones famously said, you know, Bitcoin's going to be the fastest horse in this bucket. Well, guess what Bitcoin did? It went from $10,000 to $64,000 in a matter of like 5 months, right? Well, that tells me that there was a fixed supply asset, tons of demand coming in. Inflation was still like 2-3%. We didn't get the first 5% CPI print until June of 2021. So Bitcoin moved before, and then here came 5+% for, you know, what is now over a year. Now, Bitcoin has also come down since November. It peaked at $69,000 in November, and it's now trading called 23,000, whatever it is. Why did it come down? Inflation's still high. Because markets are forward-looking. So just like, why did the stock market come down? It's because the Fed said we are going to destroy demand. And the second they started to say that, what did sophisticated investors do? Like, we're fucking out.
Okay, so you think the reason, one of the reasons Bitcoin declined is the prospect for inflation went down?
Not the prospect for inflation. It's that the Fed is signaling that they are going to do everything they can to create tighter financial conditions and they're going to destroy demand.
Gotcha.
And so again, it's pretty unique in that like Bitcoin hasn't been any different than other assets, right? In some way, when you have market intervention, like we have, especially over the last 2.5 years, all asset correlations start to trend towards one. So Bitcoin up until 2020 was like a non-correlated asset, right? Correlations were 0.15 or whatever it was. Just it's a math equation. It's not up for debate. Like you just measure the math. In 2020 until today, correlations have gone through the roof. And now you just overlay, S&P and Bitcoin or S&P and NASDAQ or whatever, and they just trade like almost lockstep. But so do a lot of assets, because what's happened is we have a manipulated market and sophisticated investors treat all of the assets in a similar fashion, right? In March of 2020, Bitcoin's correlation to other assets went through the roof. There's a liquidity crisis. People sold everything, they wanted dollars. So if you think of it today, the dollar's at a 20-year high against, the dollar index against other fiat currencies. People want dollars. So if people want dollars, the dollar strengthens. Well, if all these other assets are priced in dollars, everything goes down. Right?
I guess if you're looking for a hedge, you probably want it to be not correlated to other assets you hold.
The problem is that there is no asset right now. Right? In these situations, like basically what we're watching. So 2020, this is like a unique I think that we're still in the middle of. So it's still a changing environment. 2020 was a very short recession. It's probably the shortest on record, in that we got 2 consecutive quarters of negative GDP growth, but it was down and right back up. And that's because of the intervention by central banks and politicians with monetary fiscal policy. But correlations went to 1, right? And so that was a liquidity crisis where people were scared. They wanted dollars. They didn't want assets. They sold them off. Everything goes. If you go back to 2008, there was a 6-month liquidity crisis where people were selling assets. Gold went down 30% in summer of 2008, right? Then government stepped in and we went back up. And by 2011, gold hit an all-time high. So liquidity crises can be like super acute and short, like they were in March of 2020 into April of 2020, or they can be 6 months, whatever. In some weird way, it's not like a acute liquidity crisis. But basically what we've been in since, November, December of last year is a version of a liquidity crisis where people are saying, I don't want to have risk on because I hear the Fed. The Fed's in control. Don't fight the Fed. They're going to destroy demand. And they only are going to get more and more and more bold if inflation stays high and their actions aren't working, which is where we are. We're in this like stagflationary period. So in some weird way, everyone who's going to sell Bitcoin already has. right? Now, sure, there's day trading, there's, whatever. But all of those hedge funds, they all were selling, right? You even see Tesla, like all of the people who were looking at this as one of many assets, they sold it. They're like, hey, look, we need liquidity, we need this, we're scared, we're whatever. But like, it sits at $20,000, or give or take a couple $1,000s on either side. It's because you have a holder base that Bitcoin goes to $1,000, they're not selling, right? And so it's like this very weird asset because the more that quantitative easing and like the debasement and all that stuff is talked about, the higher Bitcoin goes. But Bitcoin, what it appears, given now, doesn't care so much about the actual inflation as much as the anticipation of the devaluation and the inflation.
Okay.
So people move the assets before it happens. And then once it happens, like inflation's here now, right? And everyone's like, oh, why isn't Bitcoin going up? Well, it's because they're looking forward and the Fed's saying, we're going to crash everything, right? And so what ended up happening is they crashed everything.
Okay. But so does it imply you're not so worried about inflation in the future because you see the price of Bitcoin moving? Or you see that it's moved down, I guess, anticipating and pricing in the inflation in the future being brought down by the Fed. So are you less worried about inflation now than you were before?
I don't think that my expectations of inflation change based on what happens to Bitcoin's price. I think Bitcoin's price changes because of the expectations of inflation, right? Which is like a weird nuance, but it's less about like, oh, I see Bitcoin do X and therefore now I think something different about inflation. It's depending on what I think is going to happen with inflation is why Bitcoin's price moves, but really it's not because of the inflation as much as it's what is the Federal Reserve's response to that inflation movement. Mm-hmm. So a great example is we're recording this in August of 2022, and we just got the CPI print this morning. It came in at 8.5%, which is lower than the 9.1% from June. There's a lot of people who are celebrating, saying, oh my God, this is amazing. We now have inflation going down. That's not what happened. Month to month, inflation was flat. The month to month change, there was no change. It's that from June to July of last year, inflation moved upwards. And so now what we're seeing is base effect. So yes, year over year change in inflation appears to be lower, but it's not because the inflation from June to July changed. It's just because inflation was going from 3 to 5 and then eventually 7% in December of 2021. So now we're getting compounding effects. So if we get to, I'll make up numbers. Let's say that we get to December of 2022 and inflation is at 7%, which people say, well, we're at 8.5% in the July reading. If we get to 7, that means we're heading in the right direction. Yeah, but that means we compounded at 7% for 2 years.
Yep, gotcha. You're not getting back the value you lost.
Like, holy shit. By the way, like Chipotle is not lowering their prices. Right? Like no one, none of the price increases are going back.
Yep.
And so you have this like really weird thing where at the end of the day, does the number actually matter? Like, I think that's like the important question. Is there a difference between 8.5 and 9%? Well, like in the official measurements, like it's all kind of manipulated data, right? And so if you even look at the CPI basket itself, like this is, the deeper you go into this, the more you're just like, this is all fucking woo-woo. 33% of the CPI basket is made up of something called shelter, which is estimated right now to be between 5.5% and 6% year over year increase. But rents and real estate are both up 12 or more % year over year. So what goes in the shelter bucket? Like, how is it that you're counting in the CPI official measurement 50% or less of the value of the increase in rent and real estate? Like, where else are people, if they're not renting, if they're not buying, like what else are they doing? Right? And so they created all kinds of bullshit metrics like owner equivalent rent and like all this like nonsense. But if you actually go and you read it, and probably one of the scariest things, if you read the CPI methodology, the CPI rent index is determined based on 1980 census data. And they just call people, and there's like 30 or 60,000 homes that they've pre-identified based on the 1980 census data, and they rotate through them, right? So they maybe call like 10,000 every time or whatever. And they just say like, hey, what are you paying for rent? Which sounds like, okay, maybe that's the best they can do. But we have Zillow, Apartment.com,
Yeah.
Square, like they have real-time data. And I think Zillow says they have 100 million data points in real time. Well, guess what their red index says? In the teens, right? Or Apartment.com, I think is like 14%. I think Zillow was like 10% or something. Like whatever the numbers are, they're like way higher than what this is showing.
Yeah.
And so it begs the question, like, is it a data problem? Is it a methodology problem? Is it a presentation problem? Like, it's probably all of it, right? But then it comes back to none of that matters because they're looking at the CPI metric. And what they're saying is we have increased interest rates and we are conducting quantitative tightening and inflation is persistently high. They're going to keep bringing the hammer until one of two things happens. Either inflation comes down or there is so much pain in the economy that they give up.
It's politically impossible. Yep.
Yeah. And I think that that's what's going to happen. I think they're going to give up. I'm not predicting what will happen, but I think that they will do it sooner than people realize because it sounds good to talk tough. Midterm elections. It's going to be real hard to go into a midterm election with the current administration saying, we know that there's high inflation and we know that we caused a recession. Vote for us.
Yeah.
Hey, you. Did you like this video? Great. Make sure you subscribe, like the video, and see you next time.